I strongly encourage you to use Slido. I don't know if you know how it is this working. You need to enter from your mobile phones on www.slido.com and then enter the code, which is hashtag 927, hashtag 927 to access our questions. But please allow me to begin this panel, this very interesting panel, addressing some questions to our panelists. And I'll begin with Calin Rangu, which is the Director of the Business Conduct in Insurance field in the Authority for Financial Supervision. Calin, you have a great experience regarding consumers and financial services users and their most important concerns and also complaints. Could you give us some examples of relevant cases for our discussion?
First of all, thank you very much for possibility to be here. I appreciate very much better finance activities. In my previous directorates, I was 3 years consumer protection director. I had some interaction with Better Finance and Alin from the consumer perspective, and it was very important for us, their feedback. Related to issues, first of all, Alin mentions our market of life insurance is quite low. Also, it's very difficult to say that there are problems on our market. First of all, it's a small market. Secondly, are not so many problems. The problems are punctuals and are linked mainly to people, not necessarily to companies. Indeed, in a previous activity, when I manage complaints, I identify, in fact, 2 categories of problems. One is linked to the bank insurance activities. When you take a loan, automatically, or in past it was automatically, an insurance, it was attached, but the client didn't know what they sign off. They sign very easy that they don't have any issue, and when the risk is happening, unfortunately, after a few years, the person is dying. It's normal, the company is undertaking are doing his investigation, but depending very much how this investigation is done, because theoretically, based on our civil code, should be proved that the client had a bad action, intentionally bad action, when he declared something and was not proved. It was example like one example. It was when someone declared that he has a bypass, but the undertaking didn't wish to pay the claim because didn't declare that he has heart problems. Of course, if that guy declared he has a bypass at heart, he has problems. Of course, after that, immediately the company paid because it was not a company decision. But this shows very much the importance of trainings, of education, of the culture inside of the companies. These things happened previously, IDD implementation. We are hoping now, after IDD, the things to be changed dramatically and will be changed dramatically. The second part is related to unit-link. Unit-link products, volumes are not so big in Romania. It was also problems resolved by IDD by the conflict of interest generated by remuneration, can say. We had example when the consumers didn't receive any money after a period of time, 6 years investment of 10,000 euro to say, but the investment had a performance around 2–3%. But that 2–3% was split between the fund managers and the undertakings, but no one thinking to the client, maybe also him should receive something, not only to cover the cost of the fund managers and the salaries of the undertakings. From this reason, to put the client in the middle of the discussion and create a culture around the interest of the client is very important. So this can be 2 examples. Probably there are also others. The size is not big, and I repeat, it's a problem mainly of culture, trainings, and from this reason, what IDD is bringing with the request to create competencies at the level of the staff is very important, and also to establish a governance system implement it other working way inside of the companies.
Thank you, Calin. If I may address you on another question, what are, in your view, the most important changes in the EU and also in the national legislation which will help consumers in the future?
I think the changes are quite known in this moment from the majority of the people. Probably the product oversight and government is a major change. Until now, we couldn't go inside of the products. All time it was say it's a private contract between two parties, it's a facultative, not obligatory insurance. Authority cannot look inside. If the people sign off something, it's their rights to sign everything. That, of course, was not also in the past correct. And Alin had a lot of experience with Swiss francs contracts, abusive clauses with other type of products, of course. And, but in this moment, product oversight allows us to look at the life cycle of the product from the creation moment, how the commissions, remuneration is developed, how the contracts clauses are in the design phase. Of course, we are not analyzing probably each contract, but initially when the product was developed, we should look there how the things was developed, if the client is inside or it's outside of that clauses. So conflict of interest related to remuneration are very important also from these unit-linked products. And there we should look very carefully how this remuneration is split in between the actors who are creating and implementing selling. Of course, at the same time, we are having demand and need test, information, transparency. These, in principle, are very nice words, should be put in practice and to avoid bureaucracy. Probably in this moment will be a very high bureaucracy. Already now the Romanian companies are in a very big unhappiness due to this bureaucracy. We are hoping in short time to go on a platform of productivity and each part to see that these are in the interest also of the companies, also of the clients, with a single goal to develop the market in the benefits of the consumers.
Thank you very much, Calin. Last question I've prepared for you. We've dedicated 10 minutes for every panelist. It's about innovation and risks, because innovation is very important for consumers, but it's coming with risks. How could those risks be managed to not undermine the value added of the innovation?
Probably the innovation and these new technologies can be not maybe the single way, but a major way to change the relation between clients and consumers, and the consumers to see the insurance like a product for their well-being, not a way undertaking to take money for long time promises and never happen sometimes when complaints or claims are appearing. Innovation will be more connection between undertakings and clients. They will be part of their daily activity. In the moment when insurance will be on a mobile phone, you can have a demand insurance. You can pay a few euro and you are obtaining a few hours insurance for something, to drive a car or for an electronic device. In that moment, the clients will feel this. Of course, will appear other issues, data, big data, like example, also EIOPA generated a very important and very good documents about big data, can create ethical issues. Now artificial intelligence will move from this mutualization to individualization of the risk. The price and the profiles will be created for each client separately, and this can be in benefits or not of the clients. Of course, if the information transparency will be correct, if our authority and each part will know how the calculations are done, which are the algorithms in the back of the big data, in that moment the things are okay. The major risk is no one to know what the machine is deciding in one moment or other, because artificial intelligence can be a real problem. I work also in banks and I implemented more tools also 10 years ago. Was not named artificial intelligence, was named machine learning, neural networks and so on. But also then, when someone was sent to the office for money laundering because an application say that that guy may be laundering some money, it was a question why? Because it was a pattern recognition, the system is telling us without to know exactly how that system is thinking in the back, and this can be a problem. So these are the risks, and we should take care that innovation to be in the benefits of the customers, not finally against the customer.
Thank you very much, Calin. I'll continue with Alexandru Ciuncan, which is now representing the industry, but in the past representing consumers at the EIOPA, both of the EIOPA stakeholder groups. And I can appreciate that he's the most friendly consumer representative for the industry, if I can say so. So Alex, thank you very much for joining us. Of course, you maybe want to say a few words, but my first question will be, why is the Romanian life insurance market so underdeveloped, and what are the main reasons for this situation? What perspectives do you see here?
Okay, good morning, everyone, and thank you for the invitation. First and foremost, before I address your question, I wish to congratulate Better Finance, Guillaume, and all the board members and all your members for your 10th anniversary and for the work that you have put in so far. And to congratulate you, Alin, for proudly representing Better Finance in Romania. Now, again, before I answer your question, I'm truly honored to have been invited to speak here today, especially since I'm a graduate of this Academy of Economic Studies. I graduated some 15 years ago, so I'm not that young. But what I can tell you, and I think Mr. Bernardino will agree to that, is that 15 years ago, so by the time that I graduated from this academy, as far as I know, at least in this part of the world, there were no dedicated conferences on consumer protection. Yeah, first and foremost. EIOPA, as an European supervisor, wasn't around. I think it was SEOPS, starting with 2003. There were no annual consumer trends report that EIOPA published. There were no stakeholder groups in all the three ESAs, including EIOPA, which has, I think it's the only ESA that has 2 stakeholder groups. Our regulator at that time in Romania didn't have a consumer protection working group. We now have one. So I think as a market and as an industry, we've come a long way. But of course, the way ahead of us is still long. So we have a lot of work to do, definitely. But I think we are on the right path. And now, this was my short introduction, Alin, so if you'll forgive me. Now, referring to your question on the development of the Romanian life insurance market, I think that the answer, and most of you know it, the answer lies within a puzzle. I mean, there are at least 3 factors that contribute to the fact that the Romanian life insurance market produces something around 20–21% of the whole gross written premium of the market. And those 3 factors, which I'm referring to, are basically, and not necessarily in this order, the insufficient level of financial literacy, yeah, first and foremost, the low or lower available income for the population, and the lack of fiscal incentives. And regarding fiscal incentives, we have a lot of projects in this regard at UNSAR level, at the level of the association, in order to be able to pass on legislation and push the development, the fair development of the market. Regarding the level of financial literacy, I will only quote one study, an S&P study, which was also quoted in a KPMG, in a recent KPMG report, which states that only 1 in 5 adults in Romania has a basic understanding of financial products, in comparison to 1 in 3 at European level. And I think this says it all. So again, we have a lot of, as a country, I think we have a lot of catching up to do in this regard. And now going back, again, this was my long introduction. Going back to 15 years ago, I think the industry changed quite a lot. The life insurance industry and not only. in terms of transparency, in terms of the way in which products, unit-linked products, because we are referring to them, are constructed. But again, what hasn't changed in comparison to 2003, 2004, what hasn't changed is the share of the life insurance within the total gross written premiums of the market. So we have a lot of work to do ahead of us, and this is why we are here, in order to promote cooperation and to find common solutions to the benefit of the society, of consumers, and of all stakeholders, of course.
Thank you, Alex. I would like to go to the next question, which will be one regarding the unit-linked policies, which were sold in the past with high promises, but they delivered in general bad results. It's not just a reality in Romania, but in also other member states. What are the lessons learned in this respect from other EU markets, and what it is the Romanian industry doing to avoid similar stories happening in the future?
I was pretty sure that you are going to ask that, and this is good, I think, because we need to be transparent here and discuss openly. But we as a market, as opposed to more mature or more developed economies, I think we come with a major advantage. And the major advantage that I'm talking about is that we are able to learn from stories, from mis-selling stories, from mishaps that happened in Western Europe, in example. So we have this time advantage because in 1995, the year in which, as most of you know, a lot of discussions started, especially in the Netherlands, on selling complex life insurance, unit-linked life insurance policies to a certain type of customers. In 1995 in Romania, I think we need to look deeper whether we had unit-linked policies or not. Even now, the uptake is in the range of 160,000 policies. So out of 19 million inhabitants in Romania, we have something around 160,000 unit-linked policies. So we have the advantage of learning from past stories, and I think the industry is doing its best in order to do that. And of course, the European legislation, like the IDD, like the PRIPS regulation, are making us go in this direction, and this is a major step forward. And now to completely answer your question, I can share from your experience. I mean, I closed the unit-linked life insurance policy late last year, at the end of the summer, and I wasn't with the industry association at the time, so I was still a consumer representative with IOPA, so the consultant that came to me had no idea whatsoever. So I can share from my personal experience that we had a very long conversation with the consultant. I was truly helped because I was looking to find the best possible solutions. I was truly helped by the key information document that was presented to me. I was surprised to be presented with a PID, with a product information document, because the policy which I bought had also a non-life side, an accident rider. So I was presented both with the kit and with the PID. I was also surprised by the fact that I had in front of me something in the range of 40 to 50 pages of paper, which I needed to read. The GDPR, the demands and need test, the kit and the PID, and so on and so forth. And some of them I needed to sign. But the biggest surprise was that although these documents that stem out of European legislation really helped me in my decision, the biggest help came from my consultant. Because I don't think a normal human being can read 40 to 50 pages and still have the patience and the time and the literacy to understand them. So consultancy, this is key here, and not a tick box exercise of saying, look, I can provide you with this document because EU legislation says that I need to do it. This is important. The attitude of the industry, and from my personal experience, because we have no other data, at least I felt it.
Okay.
Yeah.
Thank you, Alex. My last question to you is one I've put also to Calin. The impact of transposing the new EU legislation on Romanian insurance policy holders, what will be?
Mm-hmm. Well, of course, course, it's difficult to speak after all these relevant guests that we've had, and especially after Mr. Bernardino, so I don't want to go into details, but I think IDD is a major step forward. I'm not saying that it's perfect, but in terms of embedding consumer protection within insurance products, this is a true milestone. Starting with the product oversight and governance requirements, so the way in which insurance products are being consulted, moving onwards to the additional requirements that the Insurance Distribution Directive brings in terms of dealing with transparency of insurance-based investment products, remuneration, conflict of interest, cross-selling practices. I mean, there are so many texts that help consumers get a better and a more transparent deal at the end of the day. Professional requirement standards, yeah, because I was speaking about the way in which consultants behave. This is one thing. And the other thing is the PREP regulation, which although it's far from being perfect, and I think most of us, I think you guys have been vocal in this direction. I think Insurance Europe or European Forum has been quite vocal in this direction. So even though the regulation is not perfect, it is going to be amended and upgraded now. So we are looking forward to that direction. And before I wrap it up, I think that the bottom line is that we need to do more to explain to our customers as an industry association, and generally speaking, as an industry, we need to do a better job at explaining what we do, at explaining insurance products, and this is what we are doing at UNSAR. We've just finished, closed the first and the biggest life insurance awareness campaign, a campaign which was fully digital. This means only Facebook and Instagram, and this is dedicated to young people. And within the space of 2 months, for example, we've reached 1.9 million young people in Romania, according to Facebook and Instagram. Yeah, so we gotta trust them. So I think that the industry needs to do more, and hence my presence here. Yeah, I think this is the biggest proof that the industry is trying. Nobody's saying that we are perfect, but I think we are trying, and we are doing our best together with our regulator and together with all of you, I think. Thank you so much.
Thank you very much, Alexandru. Because Alexandru mentioned, I'm very happy to mention that I also graduated this university 22 years ago. And I'm very happy to see here in the audience the Professor Moisa Alter, who helped me a lot with my graduation paper. Thank you very much, Professor, being here today with us. So I'm going further to our third panelist, which will end the life insurance topics in our discussion, which is not just representing the most important German organization, fully independent, representing the interests of insured people, but he also is now the new president of Better Finance, elected yesterday by the General Assembly. So congratulations, Axel. My first question to you, it will be how we can achieve a better standard of life insurance products.
Okay, yeah. Thank you. First, I want to thank you for the congratulations and for the invitation. It's a great honor to be here in such a wonderful place here, and that's one more example why it's great that we're living in such a great Europe and visiting all those different places and get to know all those different places. That's really an honor. That's great. How can we achieve a better standard in insurance products? I think we already have seen different approaches also initiated by consumer organizations like Better Finance and also by the authorities like EIOPA. And we have been discussing different things that should be done by the products. They should be fair, they should be clear, they should not be misleading with the information about those products. But now it comes more and more that those products should be done, that those products should be published. And I think one really key product could become and should become PEPP, The pan-European private pension is, I think this could be a key for good solutions for retirement savings. And one essential thing is that we should forget about retirement savings as a synonym for insurance products. Insurance products can be good solutions for retirement savings, but they don't have to be it. They the insurance industry should try to compete with all the other ideas about of the financial industry that could provide kind of retirement savings, and so it's an open door for different ideas and different solutions. I hope that via PEPP we can also include the capital market union into the whole universe of retirement savings, because via that we can establish some kind of savings and interest within these savings in a more effective way, as we have seen it in the insurance, in the life insurance products in the past. Looking at the unit-linked insurance products, we have seen quite big difficulties. We have seen difficulties in a fair participation of the revenues, and we could perhaps find a way via CMU to let the consumers, let the citizens participate more, better, and more effective in the results for a better retirement saving. I'm coming from the Association of the Insured. We have had very bad experiences with insurance companies in Germany. That's why we call life insurance as a retirement saving, we call it legalized fraud. And, that's also because of the bad experiences we had in the past. And as you mentioned, now here in Romania, and I think in Eastern Europe, we have a very good starting point, because now you can establish perhaps a better way of life insurance, not doing the same faults that have been done in Western Europe in the past. And so from that point, I'm a bit optimistic that via PEPP, we are quite a lot of ideas coming from consumer organizations like Better Finance, coming from IOPA. We can establish ideas about good products. Perhaps they are insurance-based, perhaps they are done otherwise, but we can look forward for that. And by the way, looking at PEPP, PEPP is also an idea of a cross-border thing. It is an idea about bringing together different people from different countries under one product. It seems, it may sound a little bit small or perhaps also ridiculous, but it is not. It's perhaps one little piece to bring us together within Europe. And I think in these times, as we have them right now, it is very important to underline that and stress that, because as you said, sometimes it's better to remain than to leave.
Thank you very much, Axel. I know that you were very much involved in Germany in discussions about the stability of life insurance companies, because some of them are large companies which are doing businesses all over Europe. I want to ask you how we can get a proper view on their real financial situation.
Well, we definitely face difficulties with some insurance companies in Germany that seem to have really big difficulties concerning solvency and their financial situation. And those companies are not only working in Germany, they are working Europe-wide, worldwide in some cases. And we are really concerned about the situation there. It is not that a company already got insolvent, but there have been really fear that this could have happened already this year. That's why the legislation put a law last year to avoid that. So, but if you look at a company like Generali, Generali is not really small. It's pretty big. It's also active in Eastern Europe, obviously in Italy, in Germany, in France. And in the German contracts, we talk about 4 million contracts, life insurance contracts. They shall be sold to some kind of investor within the next time. That is a point that is really making people angry in Germany right now. But we fear that this could become a kind of blueprint for other situations in Europe with life insurance companies that don't like their business anymore so much because of the low interest rates. And so this is an issue we look very close to. Thanks to Solvency II and thanks to the European legislation, we have possibilities to look a little bit closer about how is the situation of these companies. With the so-called SFCR reports, we can analyze these enterprises. We do it together with some analysts, and to find out how strong are these companies. And I hope that one day we can have a broader look, not only on the German life insurance industry, but on others more. Then we can distinctively look at the real problems they have. So in the end, this EU legislation helps us to identify the real problems, because sometimes we get the picture that the insurance industry is not really willing to be open in the moment they have problems. Perhaps not only the Germans. I hope that Romania is different to that. And I think you really have a good chance to start a new idea of life insurance self-understanding, perhaps here. And I want to encourage you in that, and that would be great.
Thank you very much, Axel. We'll make a break for the life insurance discussion. We'll go further to the pension discussion, but we'll come back to your questions, if any, at the end. Please don't hesitate to use the Slido application also to respond to our question there. Getting further, I'll go to Radu Craciun, who is the president of the Romanian private managers of private pensions. My first question to you will be about your concerns regarding the future of the system. I've referred a lot in my short speech about the changes and the hits applied to the private pension system in Romania, and how do you see the relationship with the participants, and as a sub-question, if it is still room for improvements and if you have any concrete intentions?
Well, I just got 3 questions.
Just one.
Yeah. Thank you for inviting me here. As you know, mainly my co-nationals know that in the past 2 years, the private pension system in Romania has been under intense scrutiny, sometimes for the good reason, but most of the time for the wrong reason. And one of the things which was questioned during this period was the investment performance of the private pension funds in Romania. I want to take the opportunity to thank Better Finance for the fact that the statistics provided by Better Finance help us to prove that actually the Romanian private pension system in Romania was one of the best performers in Europe in the past years, and help us to shed a light on the accuracy of the situation in this respect. Now, as concerns the future of private pension in Romania, I think that the private pension system in Romania can exist only if there are 2 winners, and I think this is pretty much valid for any business in any field. So as long as a business provides a win-win situation between customers and investors, that business can exist. If any of the 2 parties is losing, then that business has no future whatsoever. And this is very much the case for Romanian private system as well. I'm saying this because, of course, there has been a lot of discussion about these capital requirements, which are dramatic, I'd say, and which are questioning the business case, basically, for any investor in these types of financial services. I mean, bringing a return on equity for these investors down to 3–4%, of course. It's not a serious proposal which can have a contribution to the long-term sustainability of the industry. So I hope that we are going to clarify all these issues with decision makers, with people who are in charge in deciding on the legal framework for the private pension system, and be able to continue. At the end of the day, investors, when it came in this industry, came as a long-term investment, as a long-term business case. And I think that they showed commitment by doing so. On the other hand, they have to see a future in having a return on their investments, and this has to be clarified. Now, regarding the participants and our relationship with the participants, of course, a lot can be done, a lot can be improved. And I think this requires the involvement of the managers, it requires involvement of the supervisor, requires the involvement of the people who draft the laws. If I am to think about probably the first priority, and this has already been mentioned, is education, financial education. And probably this is the best defense for the whole system, to be sure that the population and the participants understand the importance of private pensions as a complementary product to public pensions. So from this point of view, I think the ball is on our playground, in the manager's playground. And I think that the national campaign that started last year, including TV advertisements, should continue on a constant pace, in order to be sure that everyone understands the importance of saving long term. On the other hand, I feel as well that we are somehow well behind other financial services provider. We are not yet in the 21st century, and I'm referring here mainly to the digitalization of our services. From this point of view, banks are moving fast forward. You see a tremendous change every week in the way in which banking services are provided. You see newcomers in this industry, but we lag behind seriously. And from this point of view, I think that we need to be as well in the same picture with other financial services, including insurance, for instance. Private pensions in Romania, unfortunately, have not moved a lot in this respect, and I think from this point of view, we need to have a joint approach with a supervisor in order to make the product more attractive digitally. I think as well participants are entitled to know more about their product, and are entitled to know more about the performance of their product. And from this point of view, maybe exaggerating a little bit, investment performance of the private pension funds are the best hidden secret in this country. So if you want to find the financial performance of pension funds, you have to dig deeply into the internet in order to find out this, and I don't understand why. At the end of the day, I think people are entitled to know this. It's good for competition as well, by the way, among managers, which would be there much more interested and motivated in order to improve their financial performance. So from this point of view, I hope that solutions will be found to present the investment performance of pension funds in order to make it, at the end of the day, more attractive, and eventually to be a best defense about claims that the system is not performing well enough.
Thank you, Radu. Just one more question, because for us, for financial services users, it's very clear that it's very important that a new employee will be allowed and encouraged to choose, to have its option on private pension manager. But the current behavior is almost all participants are almost automatically assigned to a fund. It's more than 90% in absence of their active choice. How could we change this, in your view?
I think it turns as well, on one hand, to financial education. People do not have the tools, do not know what criteria to use when they choose a manager. It's not clear for them what they should look at. It's about financial education, and they should know, that they should look to commissions, investment performance, reputation, and so on and so forth. But it's about availability of information as well, as I just mentioned. So how easy it is for them to find investment performance, how easy it is for them to find the commissions, and everything else. And if you have to dig for this type of information, of course, that only the people which are educated enough or knowledgeable enough will be able to find them. So I think it's a bit of both. So on one hand, to know what to look for, and on the other hand is to when you look for the information, to find it easily.
Thank you. And my last question to you is regarding the proposal of the government to enlarge the investment universe for private pension funds. Do you consider it a good idea? How could the pension participants and future beneficiaries benefit from this proposal?
Definitely so, and I think it's definitely one of the win-win proposals which makes the beauty of the system at the end of the day, because on one hand, diversifying the investment universe, actually you manage risk. The more diversified the portfolio, the better risk management. But on the other hand, by diversifying the universe portfolio, we are no longer relying exclusively on the stock exchange, which has a limited exposure to the Romanian economy, but we can address other economic sectors as well, which need a lot of funding, like, for instance, the IT sector, or, I don't know, health services, for instance, which cannot be found so easily on the stock market. So from this point of view, I think it's a great idea, and it helps both the economic development and the risk management. Nevertheless, there is one very important comment which I would like to make, because of course, politicians in Romania are very interested to encourage us to invest locally, to encourage us to invest long term. And long term is the key word, because the motivation of managers to invest long term will be very poor as long as our investment performance is measured short term. Right now, our investment performance has a 2-year time span. Okay? You cannot expect managers to be motivated to invest in 10 years when we are judged every 2 years, and sometimes annually by some opinion leaders, on our investment performance. So if really there is an interest to stimulate pension funds to invest long term, that has to come together with a different approach to investment performance measurement, which has to be measured long term as well.
Thank you very much, Radu. Regarding Slido, I think I forgot to mention one key letter. Just after the hashtag, you have a V from victory. It's hashtag V927. I encourage you to complete the question, the short questions we put there. Let me go further to our coordinator of the Better Finance Pensions report, to Jan Sebo, an academy, a top-ranking academic coming from Slovakia. Let me put you the first question, which is related to this report. If there are significant differences between the performances and costs of DC-based pension schemes across the European Union?
So first, let me thank you for inviting me for this wonderful event. Secondly, going straight to the answer, yes, there are significant differences. And the report is about us, people who live in Europe. There will be a huge difference between a guy living in Sweden, earning the same money as a guy live, for example, in Slovakia, earning the same money at the retirement, because the Swedish system is much better. It's better designed. So, yes, the designers, the regulators do have their part of the responsibility of how people will live at retirement. The second part of the responsibility goes to the colleagues, the fund managers. I don't want to go into details, you know, criticizing the Romanian system, but there is something I don't really understand. Like, you have one fund for a person who is 25 years old and a person who is 55 years old investing long-term in the same fund. So who do you serve? Do you serve a 25 years old guy who will be saving another 40 years? Or do you serve, regarding the portfolio structure, a 55-year-old guy who will be retiring in a few years? So that's a matter of design and also a matter of portfolio structure. However, we have to understand that we should work on opening and understanding how our pension schemes are designed. And yes, there is a tool, well, it's still a small child, hope it will not die at the very beginning, that is a PEPP, Pan-European Pension Product. This child should unite us as a Europeans, because it will bring the same product to a guy living in Germany, in Sweden, in Slovakia, in Romania, in Croatia. We will all be the same. And yes, these kind of products will be tied with a higher power of the demand side of us as a consumers, because there will be a guy forcing the fund manager to perform really great comparing to the funds offered in Croatia, in Germany, in Sweden. So we will be pushing on these products to be perfect.
You've told me so many times that it is important to see what benefit can future pensioners expect from private DC pension schemes. What role do you think can benefit pension statement, for example, play?
If we are talking about the pension benefits statement, that is something that came from the EU level. And I know that there has been lots of criticism, but let me put it in a context, maybe in a real life. You are investing or saving long term in a product, in a private pension scheme, like for example here in Romania, it is charging you annually around 250 basis points. That's an awful number. And you are saving constantly for your future. What do you get in return? You just need one simple answer. How much can I expect to have? That's an absolutely simple question. When you go to a grocery store, you don't pay for a cup of Coke or bottle of Coke and not knowing what you get. So this is the pension benefit statement is about understanding what you get at the very end. I know there is a variation, there is a risk and uncertainty included, but still, we need to understand, because that leads to another important question. I mean, when you start understanding, oh, this is how much I can expect to have at the retirement, you can ask a second question that is really important. Okay, but what if I would not pay 250 basis points for this product, and I would rather save in a product that is charging me 50 basis points, low cost product? then you will find out that at the very end, you might expect to have 50% more. That's wonderful, wonderful findings. And then you can ask another question, for which I am paying 250 basis points. Because the financial industry is really, really interesting industry that is charging you for something that is not delivering. Because when you go to the grocery store, you get this bottle when you pay for it. But what is concerning the financial services, you are paying a part of your savings. You would never pay for this bottle like 1% of your savings. That's not the price. That's not how we live. But regarding the financial products, you always pay a part of your savings or future value. And therefore, the pension benefit statement would open the eyes to us, and we can ask for better products. And regarding the Romanian savers, don't be afraid that your insurance market is underdeveloped. Be glad about it. We suffered a lot regarding the unit-linked life insurance in Slovakia, because these companies took us as a swarm. They sold us everything. Then you found out that you are paying 500 basis points in fees every single year. When you start doing your calculations, you will find out that you have only 5% chance to win on this product. It means you will get back what you paid for it. So be patient. Rather push on better products than really increasing the coverage.
Thank you, Jan.
I'd like to make a few comments, because this is a part of a panel, because we can dialogue, right?
Of course.
So first of all, I'd like to say that this is an excellent idea, and we as an industry, we concur that actually people should know better which is going to be the value of their future pension, which unfortunately for the time being the law doesn't allow us to calculate. And actually, we shouldn't maybe even want to calculate if there are suspicions that, you know, each of us will try to window dress the results. But we have nothing against having a third party, a single entity, which could be, I don't know, an auditor, which could be the supervisor itself or whatever, to make a single calculation and help people to understand how much they need to save now in order to have a certain amount when they retire, because this is a typical question people ask and come to us and I cannot answer. How much should I save in order to have an additional pension of 500 euros per month, for instance? Unfortunately, we cannot provide that answer, and I think talking about the attractiveness of the industry for participants, this I think should have a big contribution. On the other hand, I have to mention that we do not charge 250 basis points. Actually, we charge 60 basis points per year as an annual asset under management fee. There are not many managers in Europe which charge 60 basis points per year. Indeed, 2.5%, 250 is about the entry fee, which is only a single charge. It's a unique payment. And more recently, after the new ordinance, it's actually much less than that. But indeed, I think participants are entitled to know how much their pension should be and to know how much they should save for this. Thank you.
Thank you very much, Radu, for your intervention. We will end our tour of panelists with Claudiu Stanescu, the coordinator of SAL-FIN, which is the ADR body in Romania, which refers to the complaints regarding insurance, capital markets, and private pensions. So, Claudiu, I know that you are very well prepared to tell us what SAL-FIN is, how it is working, and which are the main results delivered to consumers in this 2.5 years of working. Thank you.
Thank you, Alin. Thank you for your introduction. First of all, I would like to congratulate Better Finance for the anniversary, and I wish them to celebrate many 10 years anniversaries. Also, I would like to congratulate my colleague of panel for the new position. Returning to the subject, SAL-FIN is a Romanian other structure for insurance, private pension, and capital market sectors. It's a structure created within the Financial Supervisory Authority in order to allow consumers to make free use of an alternative dispute resolution mechanism in the non-banking financial sector. A short history: the organization and functioning regulation of the entity and also the rules of procedure were published in the official journal of Romania in May 2016. It's now regulation number 4. The members of the coordinating college were appointed in June 2016, and the first application were registered in August 2016. The structure of SAL-FIN: the coordinating college has 5 members, represented by the Romanian Financial Supervisory Authority, 2 members, 1 member from the Romanian National Authority for Consumer Protection, and 2 members, 1 by non-banking financial market, and 1 by consumer associations. Members of the body of conciliators at the end of 2018 was 23 conciliators, are natural persons who act independently and impartially. The conciliators' book is structured on 3 different areas of competence, respectively insurance, reinsurance, private pension, capital market. The conciliators apply 2 types of procedure: proposing a solution procedure and imposing a solution procedure. 3 staff members of the Financial Supervisory Authority assure the technical secretariat of SAL-FIN. In the following, we will present a few data about the SAL-FIN activity. Regarding the structure of solution according to the subject of the request, the first position is represented by motor third-party liability insurance, 74%, respectively 245 solutions. The main reason for the litigation is the claim refers to the amount of compensation. The difference of 23% is represented by solution related to other types of insurance, and the proportion of private pension in capital market has been low. It's relevant to mention new indicators. 75% of consumers have requested the procedure for imposing a solution because the consumers waiting a quick and binding solution, and 90% of the procedure were carried out online because the saving time is important for all parts involved. Also, it's important to appreciate the results, the final results for consumers. In this condition, number of solutions in favor of consumers was 75% in total. A number of solutions that maintained in its initial situation was 25% in total. Initial amounts received by consumers, in general result of a compensation, was approximately 1 million lei. After the procedure, based on the conciliator's decision, final amounts received by consumers was approximately 2.4 million lei. In this condition, the additional amounts obtained by consumers as a result of the conciliation procedure accounted for approximately 1.4 million, respectively 2.3 times more than the initial earnings. The proportion of compliance with the results of ADR procedures is over 90%. Another advantage of this kind of solution is the average duration of a dispute settlement. An average duration of 40 days for the litigation procedure by proposing a solution, and an average duration of 58 days for the litigation procedure by imposing a solution. In conclusion, the results of alternative dispute resolution can generate example of good practices that may become the basis of any commercial transaction concluded by players in the non-banking financial market in Romania. Another element with importance is the level of requested in first 3 months of this year. It's 140, representing an increase of over 265% above the same period last year. Based on these figures, you can say that SAL-FIN has already become a functional entity that has been useful for the relevant market and may increase in accordance with the necessities of the consumers on the non-financial market in Romania.
Thank you very much, Claudiu. Very interesting presentation. Very good results for consumers on this alternative dispute resolution procedure. Thank you very much to all of us for being panelists, but we will not finish our panel here. We still have time for questions. If we can have the responses to the Slido question, and if one of the members on screens, and if one of the members of panel would like to comment on it. And then please be prepared for your questions, to put questions for the esteemed members of the first panel. Any one of you want to comment? Do you see the results? I'll tell you, the most important 57% is about what should be done to improve life insurance and pension savings in Romania and in the EU. The first with 57% in favor, simpler and less fee-laden products. The second one is an adequate pan-European personal pension product, or PEPP, 26%, more cross-border offerings, just 9%, and easier access to collective redress for insured and pension savers, 9%. 8% now. It changed the proportion. Any one of you happy to comment on it? If not, nobody want to comment. I'll like to ask you if you have questions for the panelists. Okay, Alex.
I can do it. Okay.
Just a moment to have the response
just to make a short comment, because we have been invited to do so. It appears that 54% of all of us, we think that in order to improve the life and pension savings in Romania and the EU, probably we need simpler, less fee-laden products. In terms of simpler products, because I was referring to unit-linked products, even before the new legislative acts, the IDD and the PRIPS and so on and so forth, I think that the industry reacted, not only Romania, but throughout the EU, in upgrading, in changing their offering of products. I mean, I know cases where companies basically tried to increase the transparency of the unit-linked policies that they sold by properly explaining to the customer the difference between the protection and the investment components, the two components. And this was one of the major challenges before the financial crisis. So even before the IDD and the PRIPS, I think the industry was moving towards a simpler offering. And I guess this is what the answer says. However, there is only a certain amount of things that one person, one company can do in order to transform a complex product into a simple one. I mean, yeah, Jan, you're right, a bottle of water is a bottle of water, but still, a structured product it's a little bit more complex. So this is why we need, and this is why we as an industry association, we are working so hard in the direction of raising financial literacy levels, because yeah, on one side you can make products simple, as IOPA has in its founding regulation, but on the other side you need to raise the level of financial education. And somewhere, I think we'll meet in the middle. Thanks.
Thank you very much, Alex. Now the first question will be put by a distinguished top-ranking academic, which was recently appointed in the scientific committee of Better Finance, Professor Vilhjalmur Bjarnason from Iceland. Please.
Thank you. Alin Iacob has already introduced me, but I want to ask you a very strange question. Why should we have a private pension plan for individuals, as in most Western Europe at least, we have some kind of public welfare programs which is financed by taxes, and as you retire, you are in a similar situation as you have your private plan, or as you have nothing except you have this public welfare program, which is reduced if you have some private program. Why should we have any pension funds for individuals if we are in similar situation as we retire?
Yeah, so far as the idea of PEPP is, it is not that it should be another system plus the others. It should be implemented in the already existing systems with tax regulation and fiscal pluses you can get. So the PEPP wouldn't be just another product, it would fit in the system that already are existing. That is the idea behind it. Does that make sense to you? No.
Yeah, if this public welfare program is reduced for individuals, if he has his private pension plan, why should he have any private plan as he is fully insured by the public welfare program? I don't understand. You don't understand? As you are increasing your private plan,
yeah,
the public plan is reduced.
Mm-hmm.
If one is increased, the other one is reduced. If you add two together, you are in the same level.
Well, if there is a reduction in the spending of money in bad products,
in the public program, yes.
Hmm?
In the public program, if you are increasing your private scheme, then the public welfare support is reduced.
Okay, now I think I got the question. If we would really have the situation that the citizens put quite a lot of money in the public system, and that they would have to reduce this to spend the money in the PEPP, then probably we should do this discussion. But so far as I can see, there's quite a lot of money that the people spend in other products and in wrong products and in totally costful products, and those products should be replaced by the PEPP. That's, and I think that should be the solution. It would be a wonderful world if we have great products and investment products only and beside the public system, but we haven't reached that yet. The PEPP could become a possibility to show that it is possible to do good retirement savings with an investment idea beside the public system. It's not the idea to reduce the public system, but to make the investment part better?
I'll take advantage of your question and give you an answer on an explanation why in Romania is done this, because actually we in Romania are taking out some of the public contribution from the taxes and move them in the mandatory second pillar, which is a private one. So actually your question could be valid from that point of view. And the answer is simple, because all the contributions in the public system are not savings. They are not savings. They are spent the next day, right, for paying the pensions. So actually, it's a big difference is in a private pension, you do save because you have money in your own account, while in a public system, actually, you do not save, but you hope that there will be enough kids behind you to pay your pension when you retire. So it's a different system.
I am sure that you will have the opportunity to continue this very interesting debate
if I may comment
in the
on
coffee
it,
break. Just one short comment from Jan.
Really short comment. When you do the research, you cannot explain reduced benefits from public systems by increasing savings in the private ones. Yeah, I know that there is a correlation, but you cannot explain or using this explanation that we are reducing public pensions because we save more privately. And if the politicians are trying to pursue that this is the truth, don't believe them.
Thank you very much, esteemed panelists. Thank you very much to the audience. It's time for the coffee break, which is organized at the first floor here in this building, just upstairs. You will have there the opportunity for networking and to continue this very interesting debate. Thank you very much again.